Disclaimer.
All the information mentioned is all about idea for housing loan through bank financing. This is only idea for all the soonest investors before buying a new home.
Are you eligible for a housing loan? Are you dreaming of owning yourself a house and lot? Are you one of the overseas Filipino worker looking for investment in real estate? What is a housing loan? Based on the website Investopedia, a housing loan, or much known as home mortgage, is a loan given by a bank, a mortgage company, or other financial institutions banks that is accredited by Bangko Sentral ng Pilipinas for the purchase of residential property. A housing loan is a form of debt that is common and most suggested to those who want to acquire or buy properties. It is a secured debt because the property is considered an asset and acts as backing for the loan. Mortgage interest rates is usually lower. Either the lender, usually the bank, is given a fixed interest rate. How does a housing loan works? Housing loan allows to buying public the chance to own their houses and real estate properties, as it gives more payment options in buying the property. The lender holds the title for as long as the mortgage is in progress. The lender has the right to foreclose on the home if the debtor fails to make the payments. The lender, in this case the bank, has a fixed interest rate that can be paid for a specific duration. Generally, the payment is the same each period. The other type of mortgage rate is called adjustable rate. This means that the interest rate is lower and the payment methods differ. It is more flexible because the borrower holds the risk of increased interest rate. Whatever type of mortgage rate you choose, it works the same way. The homeowner pays the principal over time, and the interest is computed on a small base as the payment works towards the reductions of principal as compares to just paying the interest fees. Eligibility for housing loan through bank. The borrower should be at least 21 years old, but not exceeding 70 years old at the end of the loan term. Should be Filipino citizen or foreign nationals with an international documents. Should have a minimum gross income of $30,000 to $50,000 or its equivalent in US dollar. Should have a stable source of income from employment or business. For locally employed applicant or borrower, he or she should be working at least 2 years with his or current company. For self-employed applicant or borrower, he or she should at least 2 consecutive years of profitable business operations. For the OFWs, he or she must be employed for 2 to 3 consecutive years. OFWs should also assign a beneficiaries for loan administrator. Bank housing loan requirements. The requirements vary from the bank, but here are the basic documents needed for the housing loan applications. Photocopy of 2 valid IDs with matching application details. The borrower have at least 2 to 3 years IDs presented, like Philippine passport, driver's license, Social Security System or Access SUMID ID, Professional Regulation Commission or PRC license. Certificate of employment indicating salary, position, and length of service. Latest income tax return for the last 2 years. For self-employed, he or she must be present the article of incorporations and bylaws with SEC registration certificate. Audited financial statement for the last 2 years. DTI registrations and income tax return with statement of assets and liabilities for the last 2 years, and bank statements for the past 6 months. List of trade references at least 3 with phone number of major supplier. Customers. For OFW's requirements, authenticated special power of attorney. Contract or certificate of employment authenticated by Philippine. Consulated. Crew contract and exit pass validated by POYA Seaman. And the last is proof of monthly remittances. Authorization letter template or property collateral verifications and tax mapping. Clear copy of owner's duplicate copy of TCT or CCT. Photocopy of tax declaration or tax receipts or tax clearance. Lot plan with location and vicinity map certified by licensed geodetic engineer. Endorsement letter. Computation sheet. Contract to sell CTS from the developer, stating the contract price. Getting your dream house and lot and property is just a tip of your fingertips. Here is the process for obtaining a home loan in the banks. The person or the borrower must apply and submit the applications and informations that include her financial history to the bank. This is to show that the borrower can repay the loan. The borrower sometimes works with the mortgage broker to use the applications. There are several steps in the application. First, the borrower must seek to be pre-qualified. This process, or pre-qualifications, includes submission of the financial photos and documentation such as debt, income, and assets. Once the applications is pre-approved, the next step is you must supply the lender with all the documentation needed. The lender will conduct a financial background and credit rating check. After it was done, the borrower will receive a conditional commitment writing in an exact amount. Once the lender and the borrower approve the home mortgage, the lender places a lien on the collateral for the loan. A lien is a legal rights against assets that are used as surety to satisfy a debt. This serves as an assurance to an underlying obligations as the repayment of a housing loan. The lender gives the right to take possession of the house if the borrower can no longer pay the property. The final step is the loan commitment, which is given by the bank after borrower was approved. What is bank financing? Also known as a housing loan or home loan. This refers to the amount of money you borrow from a bank or financial institution and is given for the specific reason of buying a real estate property rather than funding a business. For employment status, typically, banks will require you to be employed for a minimum of 2 years with a specified minimum gross monthly income before you can apply for a loan. If you own a business, you must meet a minimum years of operation and prove significant financial profit. Interest rates. Bank financing typically has fixed interest rates and payment terms that you will need to oblige by. However, in some cases, the interest rates may be adjustable. Unique factors such as economic conditions can also help determine this factor. Banks typically provide you with adjustable interest rates that can go anywhere between 5% to 12% per annum. Meanwhile, fixed interest rates usually have a decided period between 1 to 5 years that banks will assess after the term. This can be good or bad option depending on the economic state of repayment terms. Your bank can also offer you longer payment terms, ranging from 5 to 20 years based on your financial capacity. This is an excellent benefit for those who prefer to balance their finances over time. Bank loans are an advantage because of their extended payment plans. However, a disadvantage is that they often charge you several fees such as property appraisal, registration, not aerial handling, etc. Requirements for bank financing is the more traditional type between the two options and is easy to apply for as long as proper requirements are met. These include preparing the correct documents such as income tax returns, financial statements, certification of employment payslips, valid IDs,